Welcome to another trading week. If you have already started placing trades, I want to ask you a question. Have you looked at the fundamentals? If you are a swing trader and your trades are going to last for more than 1 day and to a week and probably sometimes to a month, you need to know that technical analysis is not enough. So you need to balance this technical analysis with fundamental analysis. In fact, it is fundamental analysis that actually moves the market. So I have prepared a very simplified fundamental analysis for this new week. So every week I'll be here to do fundamental analysis for you as a beginner and also the experienced traders. Most people there on this YouTube space, what they specialize is the technical analysis, but I want us to balance the fundamentals along with technical and even sentimental analysis. So subscribe to the channel and hit the notification button, because every week I'll be coming with new fundamental videos along with other technicals. By tomorrow, you can come back to this channel and see some swing trades that I will be calling free of charge based on the fundamentals that we have done today. All right, so see you in the analysis. If you look at this agenda, we have the hedge fund sentiment, GDP, inflation, interest rate, and headline news. All right, so let's look at the first part, which is the hedge fund sentiment. Here I have a chart of what hedge funds are doing to the major currencies. They are selling the US dollar massively from minus 1.4% net short to minus 24.3% and minus 35.1%. So if you are on a buy on the US dollar, you need to pay attention to what hedge funds are doing. Now for Swiss franc, they were selling the Swiss franc from 5.7% to minus 3.3% to around minus 1.7%. They are still net short on Swiss franc, though they are reducing their positions, their sell positions. For Japan, they are massively selling the Japanese yen from 24.2% to still 23.8%. They seem not to have closed most of their sell positions. Australian dollar, they are selling the Australian dollar for the past 3 weeks. They actually slightly increased their sell positions, while for New Zealand, they are buying the New Zealand. They are net long on the New Zealand by 11.1%. Then Canadian dollar, they are selling the Canadian dollar by minus 12.6%, and pound, they are buying the pound. Euro, they are slightly selling the euro from minus 0.5 to around minus 1.3%. So in general, when it comes to net hedge fund sentiment, they are net short on the US dollar, Swiss franc, Japanese yen, Australian dollar, Canadian dollar, and the two strong currencies when it comes to the hedge fund sentiment is the New Zealand dollar and the Great British pound. So you need to pay attention to those things. Now the next thing we have here is the GDP. When it comes to GDP, as the GDP of a country drops, the interest the value of their currency tend to drop alongside. Okay, so if you look at the GDP here, you can see that the US dollar is still a very strong currency when it comes to the GDP, because the GDP of America is still around 3.4% compared to the other countries. Some of them are in a recession and some are coming out of a recession. Now look at Switzerland. Switzerland had their GDP from 0% to around 0.3%. Japan had a negative GDP from minus 0.7 to around minus 1.0, and currently slight increase to around 0.1%. They are coming out of recession. Then Australia has a GDP around 0.2%. New Zealand still has a negative GDP around minus 0.1%, and Canada had a slight increase in their GDP from minus 0.3 to around 0.2%. The Great Britain is actually having a negative GDP based on what we see here, and the Eurozone had a slight increase on their GDP from minus 0.1% to around 0%. So generally, US is still strong, Switzerland is slightly strong, Japan has a GDP that is appreciating, while the other currencies are in their respective order. Now let's look at another thing, which is inflation. The way that inflation affects the value of a currency is that when inflation is at 2%, most of these central banks, they like their inflation level to be at 2%. When inflation is above 2% and growing, what the central bank will do, they will try to undertake policies that will that will drop their inflation level. That means they might be trying to increase interest rate, to hike interest rate. Now, but when inflation is above 2% and is falling towards 2%, central bank will just watch to see what is going to happen. Now, let's look at the data that we see on the screen. For US dollar, inflation is currently, it has a slight increase from 3.1% to around 3.2%. For Switzerland, inflation actually is below 2% and is sliding down. So what the Swiss National Bank has to do is to try to inflate. They will weaken their currency so that inflation can grow towards 2%. For Japan, inflation is moving away from 2%, from 2.0% to around 2.8, which is a kind of appreciation, and the central bank is at liberty to increase their interest rate in order to bring inflation down. Now, if you look at the Australian dollar, New Zealand dollar, Canada, Great Britain, and the Eurozone, all these people have their inflation slightly above, but for the past 3 months, the inflation level is actually dropping. So the central bank, what they are actually doing is observe what is happening. If inflation can naturally come down towards 2%, they will not be forced to either cut on interest rate or hike. All right, but let's look at those that are very close to 2%. Is Canada and the Eurozone. They are very close to 2%, okay, and the inflation level is dropping significantly. For Britain, Australia, and New Zealand, it is slightly a little bit above 2%, but it is dropping. So the central bank would not be forced to either hike or cut on interest rate. They will be observing, except the data comes out that will force them to do the opposite. All right, so that is that about inflation. Now, for interest rates, central bank mostly use interest rate to control their level of inflation. If inflation is above 2% and is sliding away, what they will do is to hike on interest rate in order to curb inflation. But look at US. For the past 3 inflation season, interest rate season, they have kept their interest rate at 5.5%. all right, but Switzerland has started an interest rate cut from 1.75% to around 1.50%, which is a 25 basis point cut on interest rate, while Japan, on the other hand, slightly increased their interest rate from minus 0.1% to around 0.1%, while Australia, New Zealand, Canada, Britain, and the Eurozone, they have kept their interest rate at their respective interest rate levels. As traders, we are watching the first of these central banks to cut their interest rate, because we are expecting to enter a period of interest rate cuts, right? Just like US Jerome Powell, the governor of the Federal Reserve Bank, made some speeches, and they were more dovish, and you can see the US dollar dropping. We are still looking out for the first of these central banks to cut on their interest rate. Then here is headline news. The 2 major headline news that I think are significant to what we are doing today is the one that says that Swiss National Bank study shows billions needed to keep Swiss currency in check. So you can see that Swiss National Bank is actually looking for a way to drop the value of the Swiss franc. Okay, so they need around 30 billion US dollars to stop the Swiss franc from growing to 1.1 by 1.1%. Right, then Bank of Japan next hike likely in October at earliest, ex-official says. So you can see that the Bank of Japan is focused on maybe increasing their interest rate, while the Swiss National Bank is actually focused on cutting down on their interest rate to increase the level of inflation. So those are the important data that you should be considering. If you are going to place swing trade, you need to pay attention to these things and follow up this data as they unveil to make sure that your positions are in check. And this fundamental analysis is actually very important for swing traders and those that are going to keep their trades for a long period of time. If you're a day trader, maybe the technical analysis might be all you will need in the short term. And welcome back. If you have watched this video from the beginning to the end, then you are a great guy. Click on the subscribe button, okay, and subscribe to the channel. Be a part of the community. And if you want to see some of the swing trades that I'll be calling, if you check down, you will see a link on this video that will take you to that WhatsApp channel. So click on that link and join the WhatsApp community. It's totally free, and you'll be receiving some of the swing signals that I'll be dropping there free of charge. You don't have to pay anything. So thank you.